Hi everyone, welcome to Bond Bytes, daily bond market highlights from INRBonds. And today we talk about the new 5-year SBI perpetual bond. But before that, nothing significant happening in the bond markets. The 10-year gsec yield falls slightly, and the rupee is also down today. While in the global bond markets, the US Treasury yield rose by 7 basis points, increase, largely due to worries on the fact that the Fed can continue to taper and on global inflation fears. In the Indian corporate bond market, especially for the retail investors, we can't say retail here, high net worth investors, because the new perpetual bond issued by SBI, which is a 5-year maturity bond, is seeing good demand from high net worth investors. Minimum face value of this bond is rupees 1 crore as per the new SEBI norms. And the SEBI believes that high net worth investors are more capable of judging the risk on perpetual bonds than retail investors who maybe not really understand the risk on perpetual bonds, though INRBonds has put out a whole host of knowledge on the risk of perpetual bonds. Now, on the SBI 5-year perpetual bond, what are the positives and negatives? On the positive side, obviously, it is the largest bank in the country, and the credit is almost equivalent to the credit of the government of India. So investors do not have any kind of credit risk on SBI bonds. So what are the risks they face on the perpetual bonds? Obviously, one is the fact that the bond has many clauses which can kick off if SBI has issues on a lot of bad loans as we go along. But having said that, given that it is the largest bank in the country and owned by the government is always ready to capitalize SBI. And in fact, it would even have budgetary allocations for making sure SBI is the most solvent bank in the country. The second risk is obviously interest rate risk. So if interest rates rise in the market, then the value of the bond goes down. And if investors are looking to sell the bond, they might sell it at a price lower than what they bought. And the third risk is the fact that SBI may not exercise the option to call the bond. So right now, it is a perpetual bond. That means the original maturity of the bond is almost 99 years. But SBI has the right to buy the bonds back from the investors at the end of 5 years. And if they don't exercise the right due to various reasons due to making sure that the capital adequacy, that is the capital of the bank, is making sure that it doesn't go down, if they exercise their option to buy the bonds back from investors, then the investors will have to hold the bond to perpetuity. And the price of the bond can also be extremely volatile. So this is a risk. But having said that, high net worth individuals and most of the market believes that SBI will exercise that call option at the end of 5 years. That is a belief. And that is the only risk on the bond apart from interest rate risk. Well, take informed decisions on investing in perpetual bonds from INRBonds. Log into Quick Invest, a retail bond platform, to see all the best offers on SBI 5-year perpetual bond. And with the right information, the right knowledge, and the most transparent price discovery process you can find in the bond market or online bond market at present, is INRBonds Quick Invest is the best option. It's the best platform for you to invest in bonds. Thank you for listening in, and please do not forget to subscribe to our YouTube channel if you're not done so already. I'm Arjun Parsati signing off.